Hello, folks. Welcome to Market Trends. I'm David Russell, Global Head of Market Strategy here at TradeStation. It's great to be with everyone. I'm going to just start off very quickly with a few disclosures. Also, just check and make sure my sound is correct. Let me just make sure I'm coming through on the right microphone. It looks like everything here is ready to go. Very good. All right, folks. You know we do this webinar every Thursday at 2 p.m. And there's a lot of interesting things happening in a market like this. I'll tell you. From earnings news to really interesting economic news and even stuff out of the treasury, potential news today out of the Middle East, which is having something of an impact on oil. um, Very interesting set of circumstances that we're dealing with here, so wanted to just kind of go through those very quickly. Now, as usual, I'm also going to share here very quickly some important links and disclosures in the chat. Good. All right, good. All right. Now, here is the TradeStation platform. And I wanted to start off, first of all, actually, very quickly, let me go over to my, as usual, if you go to tradestation.com and you go up here to Insights, it will take you to the Market Insights blog. And on that blog, there's an article that has a rundown of some of the key things that we have. Can someone just quickly confirm who's listening? Just confirm the sound is okay. All right. So these are some of the main things we're going to be looking at today. And I'll tell you, this market, as I look at it over time, it just gets, I think doubting it is not wise. You want to be kind of careful and expect and look for like deeper pullbacks. And but the fact is that this market is tight. And I look here very quickly. I'll just say that we're not pulling back as much as you look at the certain levels on the charts, and it's interesting to see we might be forming another tight pullback. I'm going to get to that though. I want to start off though with some of these things that look really kind of interesting to me. And number one on the list, honestly, is Micron. I just want to mention this. How do we find it? So I'm using the normal MT main. And what I did was I'm looking here at MA tools. So now if you go up here on the blog post and look at the very top of the blog post, here is a link to our zip file. And the zip file includes a series of ELD files. Those ELD files have custom indicators. And then when you have those custom indicators loaded to your award-winning TradeStation platform, you can then open up the workspaces like MT Main. Now, you guys have MT Main Jan 2024. I'm just starting a new one, a new version for February, which I'll update maybe next webinar or after that. All I did though was I added average options volume to MA tool. So I started off by loading the S&P 500, and then I basically said, I want to be able to see these stocks that are, the liquid names that trade a lot. And so I added my average options volume, and I just sorted. And I will show you how I did. I sorted, and I said, let me just see stuff that trades, I don't know, something like 30,000 or more a day. We're going to go in here and then go to data, add label row. And then I went up here and I sorted saying, show me the pullbacks to the 21 day. And there was Micron. And it really grabbed my attention for two reasons. First of all, because chips have been strong. They had a bullish earnings gap here. And if you also look here, if we look in the drawings, we can see that there's something of a trend line forming along here that it's more or less holding. Um, so, the 21-day exponential has been an interesting line. The S&P 500 bounced at it recently, and back here. So and Micron, is just in that same area. Semiconductors. There's been some evidence and reports about how semiconductors are starting to see just overall year-over-year growth this year, compared with last year when they were not. And then Micron is just one of those kind of commodity plays in the space. And as they're not as much of an explicit AI name, but as the focus on semiconductors and different kinds of electronics grow, this company is one that people have been watching for some growth in. But it really could grab my attention because, first of all, if we look here, we can see that this one has the 50-day moving average above the 200-day. Some of these other names like Chevron, Southwest Airlines don't have as much of that bullish longer term trend. You can look at them, there's like Southwest or whatever. But it was just interesting to me to see what's happening here with Micron holding that level. Another one that was just kind of grabbing my attention is Freeport McMoran. Now, this company is a big copper producer. They've really kind of taken a beating with all the bearishness in China, but at the same time, they had a good earnings report, and the kind of 8,000 million pound gorilla in the room is the idea of the Fed and interest rates and everything like that. So I think right now we're in a situation where the Fed came out yesterday and they said we're not going to, we're not going to cut in March or whatever. But there are so many other things right now that just increasingly point in a dovish direction here. And we're going to be getting to those. But, I want to mention here, I'm just really wanting to start off with this because there were a bunch of signals that popped up with the pullback we had yesterday. And I wanted to get to those on the very top, the very beginning of my webinar to kind of show them to people. Another name that popped up on my list was Western Digital. This company has had a series of bullish notes. They're kind of similar to Micron. You can go and read about them, but what's interesting to me is that this one here, kind of pulling back. So one of the scans we kind of look for is things that are recently hitting 52-week highs and pulling back. We use the price grid for that. We look for stocks that have recent 52-week high or low, or 52-week high in this case. And then what we do is we kind of filter out. We say, I only want to see stuff that's made a 52-week high in the last, 2 weeks or something. So we'd go for something like 10 candles. We'd go down here and we would then add like a label row. And actually, I'll just add it one more down because this other one, MOH, it's kind of a weird name, but it also came up on my list. It's an interesting pullback. And then we just say, show me the ones that are down the most in that period of time. And then you can see right there that a company like, in this case, Qualcomm, it made a 52-week high 5 candles ago, and it's down 8% in that time. So another name here that this is just, a classic kind of pullback. Now, this is one that's based purely on price. It made a high and it pulled back a lot. It doesn't have other indicators in there, but you can also see if you use something like our Keltner pullback tool, which we've talked about recently, that it's near the bottom of its Keltner channel. That 22% reading, if it's under 50, it means that it's under the midline of the Keltner, which means it's under the 20-day simple moving average. But when you see it down here at this level, it basically tells you that it's still inside the Keltner channel. Unlike maybe something like Aflac, which seems to be having a rough go here. I'm not sure what's happening with Aflac today, but this one's getting smoked pretty good. So the thing in something like Aflac is, this is now, you'd have to look into this, and it's like totally under the Keltner channel. And in this case, when something has this kind of move, it's not a trend following. It might have a different opportunity for some kind of dead cat bounce, but we're looking at stuff that wants to be kind of near, maybe 0 -5 on the Keltner pullback tool. But those are the things that are kind of your trend following that are pulling back here. And I'm just looking at some of these, but I wanted to quickly mention the one that grabbed my attention today here was I'm sorry, what was it? It was sorry, Qualcomm. That was the one that just jumps out here on this quick pullback. So things like this, the earnings they had some kind of thing with Samsung that kind of made people unhappy. But again, watching things like this, seeing if it stabilizes around this level, around the 50-day moving average, at this point, a name like this in the coming days could be an interesting one to keep on our list. Excuse me. All right. Another one that came on my pullback list. Now, it was a similar scan. I've run this scan in different ways, but another thing was this one had recently made PDD. This one had recently made a 52-week high up here. And I think this scan, I have scans that run, for 21 days or 10 days. And I just check them every morning and I kind of write down the ones that grab my attention. But this is a company that basically is, the best performing pretty much of these big Chinese companies. Most Chinese companies have been in, under a lot of pressure because of the macroeconomic issues in China. But this name has been an outperformer. This is an e-commerce company. They own that business Temu that's been growing rapidly in the United States, buying all kinds of, they sell all kinds of products, and just seems like they've been kind of aggressively, expanding in the United States, and that's been lifting PDD. So what's interesting here is here's a stock recently made a 52-week high, knifes down really strong, no real reason for it, but this was the earnings gap up. So here's another one here. It's under the Keltner channel, but also it's one of those things where you have a rally, it goes to being kind of neutral, and then you get this kind of like shakeout and then it holds. And so this is one I think here that is potentially interesting to watch. This has been one of those really, strong kind of stories when you look at their results, and it's completely outperformed other Chinese stocks. Another one that jumped out real quick off the top was Intel. I mean, Intel is kind of like, I'd say that this is kind of like might be our model for Qualcomm. Qualcomm reported today. It was like, not that great. Intel reported guidance was bad. But again, semiconductors are in a growing, they're in another, year over year. We're looking at expecting double-digit revenue growth according to the Semiconductor Industry Association. So these things continue to kind of come together here. And here we have, basically Intel holding, stabilizing. This was one that had basically just pulled back. I can't remember what scan I used to find this one, but I'm just looking for some things that jumped up quickly. Now, another one that I found with my MA tool was Delta Airlines. This stock is on top of like all the moving averages pretty much. It's got maybe not the 100, but it's got the 200, the 50, the 21-day exponential. And so this is one, I'm just kind of pointing this out because it also has a bullish outside candle today. So this is one here that I think is interesting to kind of watch. And the reason is it's so tight here. If it starts to move, it might have the potential for some expansion, especially if the situation in the Middle East starts to improve. And I did want to mention there's a report that there's going to be a ceasefire in Gaza. It apparently came from Gaza that was citing, no, I'm sorry, it came from Al Jazeera that was citing the Qatar spokesman. And Qatar has been involved in these negotiations. But what's interesting though is if you look at oil on an intraday kind of chart, oil got hammered when this happened. Now, some time ago on this webinar, let's look at it really quickly on like a 15-minute chart. Um, and you can see I said some time ago on this webinar that whatever happens in the Middle East, you'll see it on the oil chart before you see it on TV or read about it. The oil chart will tell you first either good news or bad news. And, good news for no war is bad news for oil. So if you see oil crashing, that means that there's belief of some kind of resolution or, improvement of the crisis over there. And a rally in oil could be something bad, like Iran doing something to the Straits of Hormuz or whatever. But oil is the indicator, and oil will tell us what's happening in the Middle East. Today, oil did exactly that. It broke lower. I searched and I Googled, and then I start seeing stuff popping up on Twitter. I can't remember the guy's name. Carlos Quintanilla, the guy from CNBC, retweeted it as well about Al Jazeera reporting this. So anyway, I think Al Jazeera is based in Qatar. Are they? I'm not sure, but they obviously are plugged into that situation over there. So wanted to just kind of point out that this thing potentially happening in oil. We have remained very sort of wary of the fact that oil is headed toward, a significant growth of supplies, and also, the Chinese situation, being a continuous kind of headwind. This week we had bigger than expected oil build, bigger than expected gasoline build in terms of inventory growth. The market is still very tight, but when you look at it overall, um, it is a situation now where the volume of American growth coming online continues to put that sort of you know kind of wet blanket on oil. And the thing is that if the situation in the Middle East improves, and they've been, Biden's been working on it. This has been happening, right? They've been trying to make this thing happen now for a while. Um, then you're in this situation where you're looking at the supply demand only, no risk premium based on geopolitics, and the supply demand is inventories are tight, but capacity and production is going through the roof right now. And if you look out into the future, if you also look at the price action in natural gas, there's really, I mean, a very ugly picture right now in energy and in the fundamentals. I've been saying this for a long time on this webinar, and just today I want to just mention this thing about the potential ceasefire report. All right, another one I got to quickly mention is Citi. This one has been a really fast moving name, and today it pulled back and pretty much just held that high. This has been a very tight uptrend, and trades a ton of options. So this is a name that people looking for sort of options trades might be kind of looking toward. I wanted to just mention these right now. Now we have Apple, Amazon, Meta earnings tonight. We're going to turn to those a little bit later. Um, let me now just very quickly um, go to my blog post here, and I'm going to just go through a few some of the kind of important items on it. And basically, as I look at the S&P here, we always kind of look at these key points. The S&P had a pretty sharp drop yesterday, and my initial reaction was to kind of expect more downside, but there is a pattern, and it's a pattern that you almost don't want to believe when you see it because you feel like you're being too optimistic. But we've seen it again and again, and it's the extreme tightness of this market. We've mentioned this tightness. No pullback, explodes higher. No pullback, explodes higher. Very modest pullback, holds a 21-day, explodes higher. So, in my perspective here, when in many ways there has been this level, and if you also look back, I'm trying to actually, if you actually do a 50% retracement of the breakout from here to here, it plants you somewhere between 4,800 down to around kind of 4770 or 80 or something down in here. And we have these levels in the blog post. But the thing is, I think we also have to realize here is that um, these pullbacks are not happening. They are holding recent lows. Right here holds the recent low. This is, and look at this here, back here. Ugly day. You feel like everything's going to be terrible, but what's it do? It holds a recent low, continues higher. This is now something of, it's an inside day, which is interesting. The other thing that's important is if we look at this on a weekly chart, I actually have here, we go to MT swing. It has this weekly chart built in. If you actually look here, I'm going to hold down and I'm going to show you that the low from last week was 48.44, and yesterday's low was 48.45. So we did not get the outside week. We're holding the low from last week. Slightly higher low. Um, so I think right now we have to recognize we've seen this pattern in the market. The tightness is there, and there's a lot of sense that you want to be careful and not chasing, but also there's that expression that bull markets, they have this skepticism in the beginning. People get skittish, and then there's just no follow through, and that trend of no follow through seems to be continuing to play out. Now, remember, we have payrolls tomorrow morning. We have these big earnings tonight. We have payrolls in the morning. Then we have CPI on on the 13th of February. So then we kind of enter this period of time. So I want to just kind of point out that um, we're holding this recent low, and we've seen this pattern before. And you just think, oh, we're gonna go back, we're gonna pull back more, and then just no, it doesn't happen. And this is a pattern. So another chart we have here is our MT hourly active. Now this is a chart that I kind of came up with, and what it does is it actually includes the daily settings of MACD on an hourly chart, but it uses the hourly RSI. So what you can basically see is if a stock has rising MACD on the daily, it will be rising here on the hourly. The settings on the MACD are much longer because it's designed to work with 60-hour candles to mimic the the action on a daily. So what's interesting here is this shows you when the MACD starts to turn positive, which you can see here. We had the upward turn in MACD. You can see here where MACD turns negative, and then if we look over on this, well, I don't have it on here, but anyway, um, if you look on a daily chart of the S&P, you'll see the same thing with standard MACD settings. The key thing here is when you see MACD having been positive and then the RSI goes negative to oversold. Remember, this is hourly RSI. This is not daily RSI. In my view, this has frequently been a buy signal on equities and on many charts, especially when that 50-hour is above the 100-hour. I have just found this to be something. Now, this is an interesting chart I haven't shown you guys recently, but this is designed so that the white candle, the white crosses here will show you 52-week highs. Remember, we are combining time frames. This will use, it has daily signals like this thing is designed to show these white crosses. Let me see if I can get it to show the white cross here is basically a new high for the chart, and then the chart itself is set to, I'm pretty sure I have it set. Let me see how I did the data here. See, 1 year back, but you can see it uses 60 minutes. So this is going to now show a new high in the trailing 12 months, which is a 52-week high, will be shown on an hourly chart. And that's some of the stuff we can do with the award-winning TradeStation platform. These little circles will show you lows for the week, and the purple candles, these magenta candles, show you the first trading candle of the week. Um, so you can see that's Monday right there. It's that purple. So it allows you to quickly see where are we in the week. Are we making a high or low for the week? Things like that. It doesn't actually tell you when it's making a high for the week. It tells you when it's making um, the high for the year and the low for the week. So interesting. Just thing I wanted to share with you. My key point though is it went to that oversold yesterday and came off that, and you have this kind of recent thrust of MACD being positive. So these things suggest that at this point, with the momentum strong and holding this level across here, um, it's like I said, we, many people would probably like a pullback to 4,800, and maybe that's exactly why it might not happen. All right. I had, like I mentioned in my blog post, I highlighted this potential for, this kind of deeper pullback. But again, um, as we see the price action today and we see that we hold that inside candle, you got to respect, inside candles are continuation patterns. And this is something of a kicker when you get this plummet and it doesn't hold, it comes right back. That's something of a kicker candlestick. Now, a traditional kicker means that it breaks above. So that's what I'm saying. It's something of a kicker. All right. So let's look now at some of these important news items that we wanted to just kind of very quickly cover. I'm going to just zip through some of these in no real order, but most of these are covered in the blog post we have down here below. All right. So we recently talked about this stock CCJ. I believe 2 weeks ago it was our mover of the week. This is the kind of main uranium stock that there is. Um, it's a Canadian company. There's some other small companies like DNN, which is very small. Anyway, CCJ trades decent options, which is another reason we like to look at it. Uranium producers are surging. So we talked about this 2 weeks ago. There's this Kazakhstan company that basically is a big producer, and they had some operational problem with their mines. They warned a little while back. Um, CCJ rallied because this Kazakhstan company said we're having trouble with our mines. Then it pulled back. We flagged it on market trends as mover of the week, and now they're coming back and saying the same thing again. So, uranium seems to be in a secular bull market because everyone talks about lithium all day long and electric cars, but at the end of the day, the go green movement will, solar and all that's all happening. But right now, the the move towards zero emissions is benefiting uranium and nuclear first and foremost. And don't forget, aside from what's happening in Kazakhstan, we have the situation in Niger, in Africa, and that whole kerfluffle between Niger, which used to be a French colony, with France, and France was. There's all kinds of geopolitical stuff if you want to look at that. But the end of the day is that um, uranium coming from places like North America that have less geopolitical risk or whatever, that is something that is, performing, and that's what we're seeing here with CCJ. And want to just highlight that the uranium trade is quietly in the background, even with oil getting hit. The uranium trade continues to, you know, come together. China, on the other hand, as we've warned repeatedly, continues to have this weakness, and everything about it continues to point in that direction. But like I said, they're going to be doing stimulus. It's deflationary. It's in some ways, it's a real positive. Another thing that I was reading is that, and this was an article by Bloomberg a while back, and it's Bloomberg's opinion. I'm not entirely sure. I haven't seen a lot of other people say it, but what they've basically said is that these trade restrictions we put on China, not letting them buy these AI chips, what it's actually doing is it's forcing China to buy applied material products, AMAT. It's forcing them to buy the semiconductor equipment to make their own chips or increase their capacity or something like that. But the thing is that it's a weird dynamic now in chips where in some ways, one of the reasons why NVIDIA broke out recently was that they introduced new chips customized for China. Now, another thing we're reading, like I just said, Chinese trade restrictions increasing demand for semiconductor equipment stocks like applied materials. Look at applied materials here. Yesterday it tagged that 8-day exponential moving average. If you've been using EMA, the 21-day, if you've been using EMA tests, you would have seen that yesterday. So these are the ways we can look to use this platform and these workspaces that we're sharing here as part of market trends. You can see pretty near that high from late December. So AMAT, they report earnings the middle of February, 2 weeks from now. Want to just kind of point that one out. This one also just kind of caught some attention. Had this big surge when the chip stocks moved. And now it's, I'm not going to take the time to do a Fibonacci retracement, but we're probably looking at something like about roughly retracing half of that move here. Let me just get back to my point about China is that even when things look like bad news, they turn into good news. And like one of the things I've said is that in a bull market, everything that can go wrong goes right. And that just seems to be what's happening here. Again, here's another one. I'll tell you, I bet no one else, this story has gone completely under the radar. The government is borrowing, um, what is it? According to my notes here, if you look in the actual report, it's something like 6 or 8% less um, issuance than they expected. That means less bonds coming into the market, and that again means interest rates can go lower. It's an overall net positive. It also means that they're collecting more taxes than expected, which is actually a leading indicator of wages and employment, which means that this economy is not doing that bad. Again, this is a very positive story. And I think it's not getting the attention it deserves. Everyone sees this risk of there being this huge government deficits. If that starts to fade, I mean, that takes a lot of the negativity out of the interest rate environment. Oil's down 2.7% now. Let's take a quick look here at let me just this is I have delayed quotes for crude. So I just gotta look at this. I'm just look at this. I mean, I got to think that this thing in the Middle East, there must be some truth to it because I'm looking on my other screen where I have real quotes on my other computer, and it's down 2.7%. So if you guys want to check, I don't have time to dig into it, but this is coming up. All right, so all right, let me just keep zipping through these things. This is a crude oil article about that having, let me just kill these as I go. Crude oil build. This is one we had talked about. Natural gas. I don't even know exactly what this is. If you want to Google something, natural gas Freeport, something to do with, liquid. There was something with the natural gas exports, and I don't know what it is, but I know it's bearish. There's basically too much gas, and prices getting crushed, and that again, not a bad thing if you want to see inflation come lower. Another thing that's not horrendously terribly bad if you want to see inflation come lower are these two reports that we saw on the 30 yesterday and today. Employment cost index rises less than expected in Q4. A different number, and I'm not an economist, but I know that these are all pointing in the same directions. I mean, I don't cover exactly what each of these different numbers are. This is the employment cost index. The other one is there's another one here. There's a productivity number. There was a productivity number. This was yesterday. I'm sorry. I gotta find this. Here it is. No, I'm sorry. I've got this one. You know, there was another number that came out today. Let me find it really quickly on my other screen. There was another number. It was labor productivity. I'm gonna bring it up. All right, this number. Labor, all right, this was the one that these are both they're similar numbers, but they're different reports that come out. But what they're both saying is that workers are more productive than we thought. Wages are not going up as much as we expected. Wow, my computer here. I have too many tabs open. Let me just bring this thing over. All right, so yesterday we had the employment cost index rising less than expected. Today, labor productivity jumping more than expected. These are very similar pieces of data. We also saw wages, unit labor costs were expected 1.7 and said they were 1.2. again. Now, this is a theory I have, and I haven't heard other economists say it, but this data we're seeing is consistent with the thing I'm about to say. And that is workers are remote. Companies don't have to pay as much rent for office. Therefore, worker productivity goes up. So coming out of COVID, the trend toward remote work, even if it's hybrid work, or maybe that business trip you were going to take that you don't take, suddenly the cost of employing John Smith is less than it was, and he still does the same amount of work. That's labor productivity. So again, this is deflationary. It's another thing. This number back, and we talked about it at the time. If we go over here and we look at the S&P 500, if you look at this number that we saw at it was the beginning of November. Wait, I'm trying to remember when it was. There was this number we got. It was a revision or something, but it was back here, and it was the same number for Q3, and it was explosive. That's right. It was entering. It was right around here, and the market went crazy to the upside, partially because of the respective number that we reported on and we talked about on this webinar on November 2nd or something. So again, if you go back here, if you actually want to see, if you go back here and you click on where it says market trends, this little tag, it'll take you to the feed of all the market trends blogs that we've done. You can actually look back here to the one we did early November, is one of these here. And you can see I'm not going to waste time with history now, but this data point has been important. When you look at the Treasury issuing less debt, when you look at labor productivity improving, when you look at I'm sorry, what was the things like energy prices? These things, they continue to point in a positive direction, and the market's like, maybe the Fed's not going to cut in March, but I'm going to show you something else. TNX.X. This is 10-year Treasury yields. The market right now is front running the Fed, from what I can tell. The market is saying the Fed's done, and not only is the Fed done, the Fed's going to cut. And now at this point in time, we're going to get payrolls, then we get CPI. Like I said, at some point, we don't have the date yet. At some point in late February, early March, Jerome Powell is going to go to Congress. We're going to get another payrolls report, another CPI report. These will be coming in March, and then at the end of March, we have another Fed meeting. So if these trends continue of higher productivity, lower energy prices, things like that, then Jerome Powell might say, March, maybe. Or it could be a pause in March and a really strong conviction toward the following month. But the point is that even if we're not going to get March at this point in time, um, aside from what Jerome Powell said, everything else at this point in time seems to be pointing in a dovish direction. And that, I think, is the key point here. So this labor productivity was huge. Anyway, let me just close these as I go. Consumer confidence. This one came out also very positive. Let me just quickly go through this because, it was higher than expected. But I think the thing here that's interesting, if you look at this, is people's sense of the current situation is really getting better. Now, we talked recently about the existential kind of life view shift that was happening in the last two consumer sentiment reports. And we talked about how it was historic, and one of these things that happens every few decades. And we've been talking about how this compares to the mid 90s, and then the consumer sentiment comes out, and it is the biggest change since the early 90s. And now consumer confidence, which is similar, showing a significant improvement of people's sense of overall conditions. Assessment of risk in people's family. How is your situation? Look at this, tremendous improvement and fewer people saying bad. So basically, I just think the recession the chance of a recession keeps going down. So as this happens over time, um, you know, again, all these things play into that direction of why the S&P didn't go back to 4,800, because there are no sellers. And when this is happening with a recession, expectations, when this happens with recession expectations, what it basically means is people were sellers of equities. here. But, here, when they were getting more worried, this is when they were selling. But now as they feel less risk, they're gonna be like, I'm not a seller anymore. And so I think this is really important to recognize that this has an impact on investor sentiment. Then we turn to the overall economic situation in terms of economic activity, and it's actually now getting better. This report from S&P Global said manufacturers have started the year with a spring in their step. Business optimism has surged to its highest level since early last year, early 2022, 2 years ago. Factories are showing signs of restocking, with firms buying more imports to support higher production in the coming months. Today's Institute for Supply Management report, which is a similar report, beat expectations. So, again, we're seeing both sides of the Goldilocks. Not too hot, not too cold, but it's definitely not too cold when you see numbers like this. Look at job openings, higher than expected in December. But then we have the not too cold or the not too hot, whatever you want to call it. This is Reuters here. Even with Jerome Powell sounding hawkish yesterday, the guy was probably a dove in hawk's clothing because this is like Reuters. I mean, they don't just put stuff out like this for no reason. These guys at Reuters are not going to get this wrong. They know what they're saying. They're looking at all the central banks around the world. I even saw something here about the Bank of England might be kind of hinting. Major central banks are signaling interest rates will move lower. So this is a giant oil tanker in the middle of the ocean turning, from north to south. We're getting just more confirmation of it. This is Jerome Powell yesterday shooting down the March rate cut. All right. So another thing I want to mention here is that we have a little bit of drama today with the banks. So New York Community, what is it? I think it's NY. Is it New York NYB NY? No, I don't know what it is. It's New York Community Bank, but they got hammered, and they is it NYCB? I don't even know. They basically got smoked yesterday because they had some kind of warning, and it all comes down to commercial real estate. We've all heard this before. Commercial real estate is, all these problems with vacant offices and all this stuff. But the thing is that it's a known situation. And today, if you look at least early in the day, let's go over here to our price grid on my MT main. I'm going to just go through and just sort really. I'm going to remove this label row. I'm just going to show you guys here. And if you look at the big movers today, I mean, early in the day at least, Zion Bank was the one getting hit really hard today. But basically, there's a spreading kind of word on the street or belief or something that the regional banks are going to have more trouble. And they're going to have bad loans on stuff, and they're going to have to take charges and write down assets and maybe raise capital. It all focuses around the idea of commercial real estate being, systematically bad or systemically bad or whatever. It's just happening today. So it's interesting to see that. However, a couple days before, there was this really interesting thing of Oppenheimer coming out with a really bullish note on some of the big banks like Goldman Sachs, Bank of America, Citi, which we talked about, JP Morgan. So I want to just mention that because if this is correct, right, then the financials, stand to benefit from that. So I want to just, mention that. I think it's interesting. You know, these are a few small banks, and yet definitely there are issues with office real estate and everything like that. But I continue to say that ultimately here, when you look at the overall situation, households are not leveraged. They're not in bad shape financially. And look what I just said about the Treasury Department. They're borrowing less money than they thought they're going to borrow. So, you know, it just the bad story is just not coming together. And I think it's interesting to see this, these one-off things with the banks, and there can just be a few banks that are just bad. They struggle. They're overly concentrated in commercial real estate and stuff like that, and they just limp along for a while. But then there also will be a point when their books are clean and they can kind of move. So it's something that maybe to be thinking about longer term. However, I think it's interesting to see that the banks took a real hit today in the last 2 days on this news that came out of New York Community Bank, and it kind of spread today. Often when you see a drop one day, just follow through the next, or a rally, you get a bump and then follow through the next day. But what I see right now, if you look at the regional banks, the KRE, for example, This looks to me like just your kind of typical follow through. And again, when you have a strong economy, the potential of interest rates coming down, it's not to say commercial real estate is going to be terrific anytime soon. But the fact is, are we going to have bank failures? Are we going to have massive collapses? Or are we just going to have a few relatively unimportant regional banks lag for a few quarters as the major banks like Citi, Goldman, Bank of America, JP Morgan, Wells Fargo continue higher? I think that's really the question we now face. And I think it's interesting also just to see these pullbacks. We had done a trading view idea here on Wells Fargo as it held this level. It ripped higher and now it's kind of holding. So again, um, just kind of interesting here. This is one that, it might kind of chop around some, but you're looking at an area here, and we've talked about this over time. And, I do believe in taking longer term views on certain kinds of things, especially things like credit. Credit are long term cycles. The re-leveraging of the American economy is a multi-year process. And companies like Wells Fargo, they stand to benefit from increased lending, but also from the fact that credit quality, for the most part, will be very high. And usually, what happens with credit is it's like you start off with good credit, you borrow, and it works, and then eventually you get reckless and stupid, and you blow up, and then you crash, and then you get disciplined, and then coming out of that, you get good again. And we went through being reckless and stupid in 2008. We suffered for many years, and now we're re-leveraging, recharging that process. The credit quality is there. All those things are in place, and you got to look right now. I think it's interesting to look at the long-term potential of these banks in an expanding economy with interest rates coming down. You know, I just think that these are names that it's an interesting call from Oppenheimer, and this kind of little panic that we saw in the regional banks in the last 2 days. People might actually look back on this as you know a gift that kind of came along, um, you know, another opportunity, for people to be kind of maybe jumping in. All right, so let me just go back to some of these other articles I want to just kind of zip through. So this was from Jeffries, and then this was the thing about the regional banks today. Last thing I want to mention, Tesla says their capex is going to be going up. They're going to be investing in superchargers. To me, Tesla here remains the kind of sick man of the Nasdaq. I think it's interesting though to realize that we have this level, from October. Um, it would seem that in a bullish market, it could be chopping up here, and this could be one that gets a rebound from here, something of a dead cat bounce, maybe with some potential to continue lower after. The other thing though that Tesla can do is they can just say we're not going to do the 10 billion of capex, and Elon Musk is going to basically stop acting so strange for a while or something like that. And then you have a stock that is, potential for a rebound. So I want to just kind of mention that here. I don't know what to think of Tesla. It's such a complicated story. And the thing that I think right now is Tesla's biggest problem is that it is a unique one-off company. Um, you have big macro stories happening like semiconductors or banks. You look at a big macro story, what's happening, and those companies participate in that. But Tesla is basically all it is it's based on its own models, its own business. So it's a tricky one. And I think that now I want to just mention here that it is holding below this level, but in a bullish market, people might look for something of an attempt for it to claw back up. So wanted to quickly mention that. All right, let me just take a look here. I'm looking at a few other things that I really did want to mention. In this kind of market, we're seeing just more kind of individual names stepping up. And I do want to mention here that these medical device stocks have have been kind of breaking out. Now, what's interesting is it was recently, I think Humana had a really bad quarter, and they said that medical cost people are going to the doctor more. You're actually using your health insurance now, and that was bad for them because their costs go up as a percentage of premiums. However, if people are going to the doctor more, well, what happens when you go to the doctor? The doctor often uses some kind of medical device, or you're going to get new knees or whatever from SYK, and these stocks are breaking out. ISRG. I'm not sure what surgeries they're used for, but Intuitive Surgical, the stock now is breaking out to new all-time highs. This has been a classic long-term growth stock. This group does not get the attention it deserves. ALGN today had this earnings report. This stock's been a kind of sloppy name. However, it might be one if the overall medical group is coming together. This does more medical dental stuff. However, if the medical device group is coming together, this stock over time has been, if you look at the rally this thing had between like 2018 and 22, I mean, it was a huge rally. And if medical devices come back into favor, this is one that might be good earnings today, beat estimates. One I just mentioned that BSX breaking out. SYK, I mentioned ISRG, Zimmer, ZBH, the medical device stocks. Well, this one's not bringing out to all-time highs, but I'm pretty sure, I'm not sure actually when they report it. They report soon. This one moved on some of the other ones. The key thing is medical devices are starting to outperform. It's kind of interesting. Um, they've been weak for a few years now. Historically, going back the last 10 years, they have been an outperforming group. They have outperformed, for the most part, most of the healthcare industry. Another sector that doesn't get a lot of attention, it's a little niche, but it's been doing well, are the contract manufacturing companies. And here I wanted to point out Jabal. It used to be called Jabal Circuit, I think. But anyway, this one has been had this, earnings beat. It's been moving sideways. Earnings are in mid-March, so there's some time for it to move. You can, I think, see that there is this falling kind of trend line. This is one that I found because it was at that 21-day and the 50-day moving average. And look at this potential breakout in JBL. Again, economically sensitive name. If we're in a recession, probably not great. If it's coming back to life, then that's something. All right, I got to get these earnings also. The one other, all right, I got to just mention. I talked about PC. I did a trading view idea on this recently. It broke this falling trend line and it's been continuing higher since. But some of these oil names and refinery names, here's one. I mean, just these stocks are kind of all over the place, but CVI is a smaller refiner. But this was one here where, for people looking in terms of risk reward or things that are not as overbought, this is one that had the breakout and now it's holding above these kind of highs from back in November. This has been kind of interesting. These are just economically cyclical names. Even with gasoline builds and stuff, these are companies that, um, they trade at low multiples, and in an expanding economy, they are just kind of bread and butter stocks that perform. I think the refineries are, long forgotten. And the other thing is, as the kind of ESG trend fades, there's people who are going to feel comfortable putting oil and gas stocks back in their portfolios who are not going to get dinged on their ESG points and stuff. So I think it's important here to kind of recognize that oil refinery stocks, despite the fact that crude is going down, the refiners have been showing signs of breakouts. Another area in terms of a breakout, which is an interesting company, is Petrobras. Petrobras, the Brazilian oil stock, hitting basically. Let me show over here on my swing workspace. This one is hitting a high from some time back, like as in decade, years, long term. This stock here is going back to levels from, yeah, like 2014 or, this thing trades for, I mean, I almost was, what I can tell, it trades for like 3 times earnings. Let's look here on MT Main. Let's go to our fundamentals. Let's just quickly put in PBR. Let's see what we get as a PE ratio. 3. Trades for 3 times earnings. According to this, it has a dividend yield of 17. I don't know. Just saying. Um, Petrobras, PBR, Brazilian oil company. All right. So we have earnings. We have Apple tonight. I'm going to fire up my Option Station Pro. All right. Now remember, we'll be back same time Thursday of next week, 2 p.m. Eastern. Great to talk to everyone as always. where's my, sorry. There's something happening with my computer. I'm not sure what it is, but it has gotten slower, and I want to apologize. All right, where's my, here it is. All right. So let's take a look here at Apple. The thing that kind of grabs my attention about Apple is the potential for something like on a good report, potential for it to go back to 200. You could also look for a more conservative move to 195. So let's look at the more conservative move. 190 to 195 call spread. Let's see what we're looking at. Let's go over here to, so now just remember that if you click here, you can see that it's highlighting the earnings for today. I also loaded the earnings date. I put in the whole S&P 500. This allows you to also see who's reporting earnings, and it highlights the stocks that trade a lot of options. I'm obsessed with highlighting stocks that trade a lot of options. I mean, last time I checked, a company like Lowe's, the insurance company, isn't a very active name, so who cares, right? So this allows us to see it because it highlights it. You can see Apple right there. So if we look at Apple on the Option Station Pro, and then we look at today's the expiration of this week. Let's see. Remember I said something like a move of 190 to 195. Let's see what we're looking at. Now, I'm going to reduce my strikes. So, person could click on the 190, and then you could hold down control and click on 195. And you can see that $5 spread is $2.39. So that's a kind of risk reward of about 3 to 1, 4 to 1. No, that's about 3 to 1 if it goes that high. If it closes above 195, you would spend, if you did one contract, it would cost $129 for a single trade, and it could potentially be worth 500. So that's, you can figure out the risk reward based on that. So that's one here that, I mean, just off the top of my head, that kind of jumped out. As I look at the other ones, I mean, Meta also reports, but for me, this one is the risk reward to me is not as favorable. This is one, if anything, where a sell the news might be the sort of thing we see, and in an event like that, in my view, the thing that would make the most sense is to wait until after. And if it does go thudding lower, to be thinking about call spreads on the weakness. I'm sorry, put spreads. Look to be selling credit spread on the weakness um, as it dives and as it starts to stabilize. At this point, though, I don't see any sort of levels that make a whole lot of sense for me in this. But Amazon is a different kettle of fish. Amazon, to me, has an interesting level around 170 up here. So let's see what a call spread of something like a 165 to 170 call spread on Amazon might be. Now you'll notice that the ticker changed to Amazon because they both have the cyan symbol linking. You'll notice that it has a rounded S because that's the global, which means that the symbol will go across different platforms and different workspaces. If you go to this other setting that's called local, then it will only work in the same workspace. I'm going to keep it on global. Little just thing, just if you didn't notice that. So let's look at Amazon. We said 165 to 170. And click on 165, hold down control 170, and that spread costs, let me just make sure we're looking at the right expiration. We are. And that spread costs about $1.33. So, these risk rewards and this is a way to play a sort of trade like this. I'm not sure I even find it the greatest risk reward. If a person wanted to be more aggressive and look for a higher move, but I don't find these particularly interesting. From my perspective, the potential ones that are interesting are when they're kind of more than like more than a 5 to 1 kind of potential risk reward. But we're looking at some levels that are not all that aggressive either. So those are just some things I wanted to mention, that these are now very active. But also from my way of looking at things, the things that grab the most attention to me would be, like I said, something like Micron and City. These are the ones to me that seem to have, from a risk reward of just kind of continuation patterns. that may have the the most potential just here, especially something like Micron. When you look at just what we've seen overall, the way it's just kind of holding this level around 85. That was also kind of some highs back here on the 5th and on the 16th. So these are probably actually some weekly highs. Let me actually just very quickly look at this weekly chart over here on MT Swing. And you can see here also, this was a weekly high that it's holding. It's basically holding those weekly levels from back there in the first half of January. So just kind of interesting. The other thing I want to very quickly mention that I'm starting to look at, and this also fits the idea of cyclical growth, are the railroad stocks are starting. Actually, MT Main is better for this one. I'm sorry, the MT Swing. Um, if you look at this one, Union Pacific here, you can see it's hitting here its highest level since April of 2015. Just inching. I'm sorry, 2022, and it's just inching along these highs. Union Pacific and CSX, both of these have very tight sort of patterns here. This one reported earnings, tried to sell off, and they just bought it. So to me, it's kind of interesting to see what we're seeing in the railroad stocks here. I know that they don't get a lot of attention and they're not that glamorous, but if the cyclical economic story is in play, people looking to basically play that macro, will be looking potentially to something like railroads. They are industrial stocks. Even though they are not manufacturers, they're transports, but they fall under the industrial bucket. So I think it's important just to kind of, um, you know, maybe just be aware of these names that are there. Those are the main things I wanted to talk today. I will be back next week. I'm trying to see. I think I got everything I wanted to. Oh, the last thing, actually, I'm really sorry. I didn't cover this. Is my mover of the week is PLAB. This one caught my eye because it had recently made a 52-week high and it pulled back sharply. I think it was also yesterday when I created this, it was at the 21-day exponential. And here it is. Big earnings. This is a company that makes um, something for semiconductor manufacturing, something called photomasks. I don't even know exactly what that means, but it's something to do with creating semiconductors. And it is also, let's take over here on the weekly chart. We can also see this one um, on our MT swing. We can also see breaking out on the weekly to all-time highs. So, this is also an interesting sort of company. And, names like this growing over time, it's not that big yet. But a company like this, let's also look over here on our fundamentals grid. Um, what I thought was interesting about this one, PLAB, AMAT, if you compare it to other companies related to semiconductors, this one trades for a lower multiple. This one trades at like 14 times earnings versus 20 times. It trades for lower price to sales, lower price to book. Its revenue growth is, according to this, it's actually higher. You can see it's a much smaller company. But companies like this, I'm just saying over time, these companies um, they tend to end up in indexes. They tend to add up in, you know, the S&P 500 one day. It's not big enough yet, but this seems to be a long-term growth stock breaking out to new highs at a time when semiconductor manufacturing is underway, and we're also seeing that situation like the Bloomberg thing said in China, where basically China is starting to invest more in their capacity to build semiconductors, and apparently that's actually helping PLAB. This is my move of the week. I don't remember what we did last week, but the week before that we did CCJ, which is moving. So these movers of the week are basically companies that are not in the S&P 500 but are showing some interesting sort of activity, some interesting price action, typically breaking out to new highs. So I wanted to share that with you guys. I will see you next week, 2 p.m. on Thursday, February 8th, same time, same place. Have a great week.